Are you? Hi, welcome back to Tuesdays with Tracy. I'm going to give everybody a couple seconds to start logging on to our Facebook Live. And as promised, I have a great team member here that we refer to a lot. Her name is Dino Champagne, and the company she works for is Asset Preservation. Did I say that correct?
Yes, you did.
Okay, it's a mouthful. Dino is here. I asked her actually to pull a rabbit out of the hat. Her topic on 1031 tax exchange is a monster big topic. And Dino has graciously agreed to give you some bullet points on a topic that could take quite a while. I said it's about 10 minutes and she thought
10 hours.
So we're not going to keep you for 10 hours.
Promise.
So anyway, we refer to Dino with our clients that get ready to sell rental properties and aren't quite ready to pay Uncle Sam a giant chunk of the the equity that they've made, the income. And I bet a lot of you know friends that are getting ready to sell rental property, and what I wanted to do is have Dino give some basic bullet point information. And if you look at our Facebook page there, Dino's information, her email and her phone number are there. And if Dino talks about something that sounds interesting to you, you can contact her directly, because even if you called me, I would give you her information anyway. So Dino, I'm going to have you take it away with some of the things that people don't know about the benefits of a 1031 tax exchange.
All right, first, Tracy, thanks for having me on. In 10 minutes is going to be a difficult time for me to keep it all together. When we're talking about a 1031, that's actually a part of the tax code. So sometimes you'll hear folks refer to it as a loophole. It's not a loophole because anyone that qualifies to do it can do it. So it's been around almost 100 years now. The 1031 code started in 1921.
Wow.
So what's interesting about the 1031 is when an investor goes to sell their investment property.
Right.
Right now, if they just sold the property and went out and purchased the property, because of the tax that they would have to pay with the sale of that property, and there's about 4 taxes that could come into play when somebody's selling an investment property. So let me just highlight those pretty quickly.
Perfect.
When you have an investment property, the first tax that's going to come out is the recapture tax, because as an investor, you've been depreciating that property, which means while you're operating the property, you've been lowering the real estate taxable income. So when you sell it, it is going to have an impact tax-wise. So that's a tax rate about 25%. And then you have the federal long-term capital gain rates, which range 15% or 20% depending on your income bracket. There's an additional tax called the net investment income tax, which is also known as the Affordable Care Act tax, which is also known as the Obamacare tax, which is a potential another 3.8% if your income hits a certain amount. And then there's the state of California. So the tax rates in California range anywhere from 9.3 to 13.3. So those are the 4 taxes that an investor will face when they sell an investment property. So when you talked about, that equity that they have that's going to be taken away, that's money that's never returned to the investor.
Right.
If you sell and go out and you want to just buy a piece of property. And that can be, when somebody asks me, how much are you going to pay in tax? I go anywhere between 30 to potentially 40%.
That's a lot.
Yeah, you should always check with your tax advisor on any type of transaction of this nature, because the tax advisor is going to let you know whether you need to do an exchange or not. Because truly it's a tax election transaction. But when you think about potentially losing $100,000 or $150,000 of the cash coming out of that transaction going to pay taxes, that can sting pretty badly.
Yes.
So with the 1031, you have an opportunity to defer that tax and go out and purchase a replacement property, or as we're seeing in the marketplace today, multiple replacement properties. I believe you and I worked on a transaction where one of the clients that you had referred sold one building and ended up buying 5 different pieces of property throughout the United States, if recollection is there. So that's one of the beautiful things about a 1031. So when you stop and think about it, a 1031 is a continuation of your investment ownership, albeit maybe in a different geographical area and or a different product type. Okay.
Which is great, because that's the other thing I wanted everyone to know is if maybe you have family in Texas or Chippewa Falls, Iowa, that are thinking about selling some rental property. Dino can help them, even though she's based here in California. The process they can handle all over the United States, and that's the point that I was after with our clients. Is I want you to know that there's professionals out there that can help you from stepping on financial landmines that you didn't potentially know about. A lot of times when people come to you, they don't understand that there's also like time limits to this process, right?
Yes. When you're getting the opportunity to defer the tax on the sale of the property, regrettably, the government doesn't give you forever to do that. And the time frames, so there's pros and cons to doing an exchange. Clearly the pros are the fact that you get to defer the tax. You can diversify asset class, diversify geographically. Then there's the con aspect of it. And the one of the con aspects of it is twofold. One is you have to meet the time requirements. So the time requirements are you have to complete the exchange within 180 calendar days from the date of closing, but the first 45 days of that time period is when you have to identify the replacement property. And then the other criteria that's important to understand is that it's not just the gain that you reinvest, nor is it just the cash coming out of the transaction. In order to defer the tax, you're rolling over your gain plus your basis in the property. So you have to buy property equal to or greater than your net sale price.
Right.
So those are the two cons, if you will, to the exchange.
Well, the process is really interesting too, because your company actually, once an escrow closes, the money actually is signed over to your company, correct? So the people don't touch it. That's what keeps the defer part of it?
Well, exactly. So that's, when you're doing 1031, you must have a qualified intermediary, also known as an accommodator.
Cool.
Because the transaction, and very important to understand, because I will get phone calls even to this day, and it's a sad call. When somebody will tell me, I closed on my escrow 2 weeks ago, and now I want to do an exchange. The exchange must be set up prior to the close of sale. So it's important that if you're an investor and you're considering selling an investment property, and we're in a good market for sales, no doubt about that right now, that you explore the option twofold. One, you talk to your tax advisor to determine whether you need to do an exchange or not based on your situation. And the other party would be someone like me to explain the rules, the timing, the requirements in order to facilitate the exchange. When you do this in advance, it gives you a leg up, if you will, on the transaction. Sitting there doing this thing, Facebook Live, you have to think about the 1031 is like, it's sort of like a Facebook Live video right now.
Yeah.
Once it starts, it doesn't stop, okay, until it's over. So there's no stopping, there's no redoing, so you want to be prepared when you get into this transaction. So a lot of groundwork ahead of time really helps, because it's a difficult market right now to do a 1031 because of the time frames.
Absolutely. And again, thank you. You just gave me a platform. Again, this is one of the things that Tracy and me and the team want to bring to our clients all the time, is we want you to know that there is a difference in the way you do real estate. And if you're not talking to a professional right up front that cares about you and wants to help you understand different strategies that could save you potentially tens of thousands of dollars, and you said people hundreds of thousands of dollars, it's important to identify the proper professionals before you get ready to do something. This is not a one-size-fits-all. And Dino, I so appreciate this. And again, if people want to get a hold of you, they can call you at that number?
Yeah, please feel free to call me with any questions you have. I like to say it's the one you don't ask that's going to cost you money. Happy to accommodate. Pun totally intended.
Awesome. Dino, thank you for coming on today. I really appreciate it. She schlepped out for 2 hours to get here to talk to you guys. Thanks again, guys. Next week's topic is going to be on what the market is doing and the shifts that are now happening.